Assalamualaikum. My name is Nur Ain Hakimah. So for now, I will present about auditing long-term liabilities. In auditing the long-term liabilities, auditor need to ensure the assurance of the amounts of various long-term liabilities in the balance sheet are not materially misstated. Besides, auditor also need the assurance of recognition for interest expense because it will be related to the long-term liabilities when the auditor started doing the test. The fact is that the interest has to be involved if the long-term liabilities is correctly stated in the format of the long-term debt. The substantive test is usually being used as a strategy by the auditor to audit the company's long-term liabilities due to the efficiency and effectiveness of the test. Meanwhile, the inherent risk for long-term liabilities is ordinarily evaluated from low to moderate because the long-term debt doesn't have a lot of transactions occur like loan, bond, mortgages, notes, lease and contingent obligation, whereby the maturity date is obviously more than 1 year, which makes them less transactions. However, the inherent risk might also be high since the characteristic of long-term liabilities itself is often in a large value or amount and has a sophisticated and complexity instrument in it, which it is developed by the financial market. Subsequently, when the auditor follow the substantive strategy, they still need to understand sufficiently on the internal control system of the company in order to ensure the financial records and disclosure of long-term liabilities is correct and appropriate enough. The auditor need to know the assertions and related control activities for the long-term liabilities. For the next slide is assertion and related control activities for the long-term liabilities. And one of the assertions and related control activities for long-term liabilities are occurrence and authorizations, whereby sufficient documentation needs to verify that a note or bond was correctly authorized. In addition, or large debt commitment must be approved by the board of directors or by the executive who have been delegated this authority. And for the next one is completeness. It is a vital assertion where company need to maintain about all information regarding the long-term liabilities that owe by the company in a subsidiary ledger. The amount stated in the subsidiary ledger should be reconciled to the general ledger and control it regularly. And the third one is an assertion of valuation, which is done by recorded the face value of notes and bonds after deduct it with any unamortized discount or add it with any unamortized premium. After that, the effective interest method shall be used to amortize the discount and premium. For example, if the company sold the bond at some rate which is greater or lower than the market rate, it will result in a discount or premium. When the company sold the bond greater than the face amount, the company sold it at premium. But when it sold at lower than the face amount, the company will sold it at discount. Therefore, the premium or discount need to be recorded on the books with relation to the bond payable itself and further with the amortization of premium or discount. And the last one is classifications. Controls need to give assurance that notes and bonds are correctly classified and make sure that the portion of long-term liabilities which is due in next year is properly classified as a short-term debt.
I will present about auditing dividend. Auditing purpose to make sure the accounts are accurate with the real transaction. When the distribution of the dividends, an auditor has several duties to perform such as for accuracy, verify that stock and dividend transaction comply with corporate charter. For accuracy, verify that stock and dividend transaction have been properly posted and summarized in the accounting records. For valuation, verify that stock and dividend transaction have been properly valued. And last one, for authorization, verify that stock and dividend transaction have been properly approved. These all dividend declared and paid audited because of concern of any violation of corporate bylaws, laws or debt covenants. All the steps of audit duties above are to make sure the auditing dividend are following the procedure and no fraud happen. The auditor can validate the amount disbursed, with the agent when an independent dividend disbursing agency is hired. This sum is in compliance with the board of director authorization. When an independent agent is not used, the auditor can recalculate the amount of the permitted dividend and track it to cash disbursement or dividend payable.
Share capital account is an amount invested by the company's shareholders for the use of business. It is divided into two types of stock, which is ordinary stock and preference stock. Auditor begin the audit by obtaining a schedule of all the activities in the account for the current period. The auditor want to check whether the validity of the share capital. The share capital must be properly classified and described in the account. Second thing is they want to check whether the share capital is properly authorized and completely presented in the balance sheet. There's three principal audit assumptions that the auditor used to support and verify the information found in the company's equity account. First thing is validity and completeness. Once all the valid share capital transaction that has been approved by the board of directors or the shareholders, the external auditor performs some procedures to ensure that the reported share capital actually exists on the date of reporting, and the type of share capital transaction that have been occurred should be documented. Firstly, the auditor will trace the share capital transaction between the shareholders using the stock register and the stock certificate book, and then check the number of share outstanding in the general that will be added to the stock register or the stock certificate book. Lastly, the auditor will also examine any stock certificate that been cancelled and examine any unissued stock certificate in the book of stock certificate. Next one is valuation. Auditor will evaluate if the share capital is recorded in according with the applicable accounting standard. Example like stock dividend may also created complex with auditing issue. So the auditor must recompute the dividend and trace this to the general ledger. The last one is disclosure. There are several important financial disclosures that must be made in order for the entity to expose the share capital. Example of disclosure items are like the memorandum and articles of association, minutes of board of directors meeting, documentation and filing of regulatory agency, and etc. Any related and pending transaction under the disclosure might impact on the stockholding equity.
Hello, Assalamualaikum warahmatullahi wabarakatuh. My name is Umi Masara Betty Rosli and my metric number is 273328. So today I will present about shareholders equity. In auditing shareholders equity, it can be divided into three components that comes from financing activities, which are dividend, share capital, reserve and retained earnings, because all of these three items give an impact on stockholders equity. For an auditor, there are three types of transactions that are vital to them. One of the three transactions are about issuance of stock. For example, one of these is about getting cash based on selling of stock, meanwhile for asset are about exchanging of stock and stock split by issuing of shares. Next, it is about transaction of stock buyback, which will be included with retired share and repurchase of share. The last transaction are about the distribution of dividend, which can be categorized in both cash and stock dividends. Next, we move to the next part, which is auditing reserve and retained earning. Retained profit or earning have a definition as the cumulative portion of companies profit that are not given as dividend to shareholders but are instead for reinvestment back into the business. Income or loss that happen in the year can affect the RE. Besides, reserve have a meaning related to the fund aside from return profit to meet certain business needs. Reserve are a portion of return earning. The fund is used for growth and expansions of the entity. There are some transactions that can be classified as major exception for this. In instance, the transaction related to prior period adjustment, correction of error, stock retirement, valuation account for marketable securities and foreign currency translation. Lastly, audit procedures for reserve and return earning roughly have 6 steps that can be done. The first step can be started with auditing the return earning by obtaining a schedule of the account activity for the time. Second, we can take a look at the starting balance, then it should be the same as the prior year's working paper. Thirdly, we can take a look at the income statement that may be used to determine the net income or loss. Next, any cash or stock dividends should be verified with its amount. And next, if there are any new modifications to return appropriations should be tracked back to the contractual agreement because everything required it to be documentarized. And lastly, an auditor should make sure the necessary disclosures related to return earning are made to footnotes. That's all from me. Thank you.
Income statement audit is also called as financial statement audit. This income statement audit means that common part of closing the financial books. It is also meanings an income statement audit is that the examination of an associate degree the entity's income statement associated degree concomitant disclosure by a freelance auditor. These audit procedures can help entity to confirm the precision of the accounting data and help them to compose the income statement. It can make sure that there is not any material fraud would happen in the company or entity. Financial statement needs to be verified, especially for the outline calculations. They will make sure the difference between the revenue and expenses. In these audit procedures, equity section also needs to be verified. The purpose to audit this income statement is to include the quality to the report, income position and performance of the company or entities. For example, before supplier willing to extend the trade credit, supplier will also require the audit income statement of the company or business. By this purpose, the income statement should include the income details and paper audit sampling. In income details, they can ensure that the information provided in the statement is correct and no error. They can also make sure that no transaction be missed and the figure is correct. They should confirm they are posted correctly. It is because the audit revenue and expenses account is depending on the extent of work conducted on the entity control system and balance sheet. Not only that, but there are also some substantive procedures on selected income statement account. One of the substantive procedures is detailed test on selected income statement account. It is normally audited while auditing the related balance sheet account. For example, the item that balance sheet audited is long-term debt and the related income statement account in insurance expenses. From the explanation, the balance sheet account audited is related to the financial statement account. Basically, the result of testing control from the different business purpose. For example, if the control are handling efficiently, the auditor maybe can reduce the control risk that will below the maximum of the control risk. The reason that the control risk will be set on maximum is the auditor will not be dependent on the controls. It is also the substantive procedure on selected financial statement account. In this part, There are also included primary stage of an audit. There are three primary stages of an audit. The first is planning and risk assessment. Planning and risk assessment is involved obtaining a realizing of the business and the business setting within which it operates. And they will use the information to examine the risk that could impact the item of income statement. The second stage is internal control testing. The internal control testing is included the authorization, segregation of duties, and the safeguarding of asset. The last stage of the audit is the substantive procedure. The explanation is the same with the substantive procedure on selected income statement.